Look at this. Even with the filters and the updated moving average, our bot is still forcing buy positions while the price is in a free fall. Today, we're going to break down why it's still acting so stubborn and how we can finally fix it. In part 3, we only had a buy function. The result? When the gold market got aggressive, we basically threw our money away. Someone commented that MA100 is better for detecting sideways markets. So let's give that a try. Now, let's look at the code. Pay attention to this line. If ask is greater than current MA and current RSI is less than RSI upper and open 0 is greater than open 1. In plain English it means, hey bot, you're only allowed to buy if the price is above the major trend of MA 100. You haven't run out of steam, meaning RSI is below 70 and the current candle opened higher than the previous one. To make this video even better, we're adding a sell function. We're just reversing the logic. Now, our bot can go both ways. If the trend is down and the candles start diving, it'll execute a sell. This makes our trading much more efficient. For this test, we're setting the take profit to 5,000 points and the stop loss to 2,000 points. But why is the result still looking like this? It turns out the open 0 greater than open 1 filter isn't strong enough to handle gold's volatility. The price bounced slightly. The bot thought it was a move up, but it was just a trap. In the next part, which I hope will be the ultimate solution for part 5, we'll use a new logic. If the current open is lower than the previous candle's close, buying is strictly forbidden. We'll also hunt for those top sell entries at RSI 90. So, what MA should we use for part 5? 100, 200, or should we combine both? Cast your vote in the comments below.